Okay, peeps, welcome back. So today we're going to be going over the YieldMax Fund of Fun distributions, which were announced today. I believe the X date is tomorrow. So by the time you guys see this video, the market unfortunately will be closed. But if you guys have been following this content for a while, you know when the X date's in and the declaration dates are, so it shouldn't be an issue. With that being said, let's get it. So we'll go over here and look at the Global Wire news post. This is, I guess, from Chicago, Milwaukee, and New York. Chicago and New York are very, very well-known finance zones, so to speak. So the YMAX is paying just shy of 57 cents per share. YMAG is paying 59 cents per share, so this one actually paid a little bit more than YMAX, but that's probably because YMAX is also more diversified. YMAG only has the Magnificent Seven, whereas YMAX, I believe, has, I want to say, 18, 19 different holdings. I'm not sure if they added MicroStrategy at this point or not, but it's a lot more. So, and then UTLY is $1.06.5. So we were considering picking up ULTY this morning, but again, the fund is very new. The market cap is very low, so there tends to be very large bid-ask spreads when there's a small market cap or low liquidity in any particular stock or fund, which means that if we try to sell, we might end up selling at a much lower price than we want. If we try to buy, we might end up buying at a much higher price than we want. So we're going to wait another month and allow some liquidity to funnel into that particular fund, so it increases, the market cap gets bigger, and then at that point we might start picking some up. But anyways, the X date is tomorrow. Payment date's on the 18th. You guys can see that it paid 31 and 34% respectively. Pretty good payments, if you ask me. So we're going to go over to the ULTY holdings, which we have actually not covered on this channel yet. I'm sure you guys probably thought we were going to do a video about this, but we did not. We've been so hammered with so much different stuff. It's not even funny. Barely even have time to manage that, let alone do anything else. So anyways, as you guys can see at a bird's eye view, this is the ULTY fund. They just released it, I think, like at the end of last month or something. So some of the companies they have is Affirm. Obviously, Affirm is a very popular swing trade stock right now. ARM, that is one of the companies that NVIDIA tried to buy out. So that's also a very good company for AI and semiconductors and swing trading, maybe even investing. You have Chewy, which I'm pretty sure is a pet food and products manufacturing company or something like that. So I went ahead and downloaded the holdings. As you guys can see here, these are pretty much all the holdings. Again, it says that it has like 52 different companies or positions in the fund, but maybe they changed it. I'm not sure because I saw ALT or Altimmune in there last time I looked at the spreadsheet, and it's not here this time. So as you guys know, that's one of the stocks that we swing traded for about a $700 profit. So we have Affirm here, ARM, which again is the company that NVIDIA tried to buy out. That's an AI semiconductor type company. Chewy, CleanSpark, which is a Bitcoin miner. We do not have CleanSpark, but I've heard that CleanSpark is actually a very profitable Bitcoin miner. I could be mistaken. So you have Coinbase, Carvana. That's obviously another very popular one. It's like a car delivery company. Not sure what GCT is or FGXXX. Have no idea what those are. So you got Groupon, LABU. Mara, this is another Bitcoin miner. We actually do not have this one. And then you have looks like some other positions in here. Not sure what they are. MicroStrategy, that's again another Bitcoin play. RILY, I have no idea what that is. Riot is the second largest Bitcoin miner in the United States. You have SMCI in here, which is super micro. That's basically the single stock in the Russell 2000 that lifted the entire Russell up pretty much the last quarter because the hype on that stock has just been absolutely bonkers. And you also have Soundhound. And just so you guys know, SMCI is also an AI / semiconductor play. For any of these future technologies to become a reality, there has to be semiconductors and AI chips. Okay. That's the absolute base level foundation. If that doesn't happen, then there is no future technology. So that's why these AI semiconductors companies are so important. So as for Soundhound, we do actually have Soundhound. We have 300 shares currently, and we are massively in the money. We actually just rolled a contract this morning. I'll show you guys that real quick before we show you the portfolio. Uh, so before I do that, a quick take on ULTY. So pretty much ULTY could actually be a really good diversified fund to buy for some price appreciation and dividend appreciation exposure going into the crypto bull run, which we're technically already in. But Bitcoin hasn't had its supply shock, meaning the halving next month. So once that happens, probably shortly after that, we're really going to start seeing this thing kick off. So with a lot of the Bitcoin miner plays and the AI plays, this could be a very bullish fund to hold. I suppose that the AI narrative could be a bullish way to offset any potential bear market that could come in crypto. So it's kind of almost like a double hedge when I think about it like that. So could have a lot of growth and dividend appreciation in the future. But anyways, so let's get into the positions here. So we rolled Soundhound from basically an in the money call to an out of the money call. There's something we didn't realize about in the money calls when using this platform before. If the calls are in the money, like deep in the money, they get called away automatically. We found this out with ciphers. So we unfortunately did not find that out until we already had Soundhound deep in the money at 50 cents a share. So we went ahead and took the hit on that. It cost us about $1,200 to close out that trade because we were going to try to roll it again for a further expiration out even deeper in the money with higher premiums, but it was not getting filled. So we said, screw it. We're just going to pay the whatever it cost for the debit to close it out. Technically, that's just getting our money back because again, we received $16.50 in premiums to open the deep in the money call, and then also we would have had to sell at 50 cents a share, so that's another 150. So we would have locked in 1,800. Our cost base is 1,500, so we would have been guaranteed a $300 profit. So putting out $1,200 still technically gives us a piece of the pie back plus the $300 in extra premiums. So we rolled it out to $12 and it cost us a decent chunk of change, but again, not a big deal because by the time this thing hits $12, we'll be very, very profitable on this. So as you guys can see on SoundHound, this thing just has been absolutely tearing it up since this morning. I'm not sure what's going on. Maybe there was some kind of news catalyst or something, but this thing has just absolutely moonshot. So it went from basically about $7 to $8.64. And again, the $12 strike price does kind of line up with a thesis we told you guys. So as you can see on the week, it went from 530 to basically $8.40 a share now. Currently, it was at point like almost $9. Again, this is what we would be giving up right here, as you guys can see on total return, if we did not move our trade from in the money to out of the money. So we didn't want to give up the potential for profit there. So the average share price is $4.95. The strike price would be $12, which we're going to show you in a minute. So we'll cover the difference here. So $4.95 or 12 minus $4.95 times 300 shares. That's roughly about the profit we would get. So again, our cost base is $1,500. It cost us, I think, like $12.60 to basically cover the in the money call and move it to a higher, much higher strike price. Up at $12, which again is a profit target we showed you guys on the charts. So this is what the profit would be. Plus we would then get the initial cost basis back. Plus we would still also get to keep the $300 in premium from the last trade. So that's what we would wind up with our total amount minus the cost basis. This is what we would be left with after the trade. So roughly plus about $2,400. So let's go over here to the charts. Actually taking a look at Bitcoin earlier this morning. I wanted to see if that pi cycle top popped up, and it did not. Don't think that's going to pop up until after the halving. I really just highly doubt it. So We'll show you guys this on the charts one more time. We posted this on X. Not sure if you guys saw it or not, but we kind of saw this like weird thing going on here. Now this is not so obvious because you kind of have like really a lot of gaps in between these candles. But we said, okay, this thing kind of does look like a bull flag, right? So we took our measured move here. In order to be sure it was a bull flag, we moved that to the weekly here and we said, okay, yeah, this pretty much looks like a bull flag, these two candles here. So basically the start of the move would have been the first massive green candle down here at the bottom at basically $2, which was the start of the move. We moved this little bar up here all the way to the top. And you guys can see the target is nearly $12 on the charts. So the strike lines up perfectly with that. So again, the strike price is $12. The expiration date is really, really far out into the future. So we actually had to go pretty extreme with this one just to get out of the previous trade to be able to take profit. Keep in mind, even if this hits $12 before the 16th of January of 2026, which again is 2 years away, again, we can close this trade anytime we want. It wouldn't be a problem, but it can get called away anytime before that date, and that's exactly what we want to happen. So we want it to hit $12, get called away early, that we can get out of the trade and maybe reposition at a later point in time. So here's what it cost. Again, that's what it cost us, but our cost basis is $1,500. So we're essentially getting roughly about, we're having to put up 75% of the initial investment to cover the trade. And then, of course, once it's in profit, that'll take care of that. We'll get our money back and stuff. So anyways, going over to YMAX here. Our personal positions, I think this is pretty much all we're going to accumulate in this position for now, not just this month, but going into next month as well, because we have a lot at this point. So any of the profits that we got from MSTY and Coney, we've been moving that money over into this fund in advance of the ex-dividend date. So once again, we'll basically just round it up here, say it was 57 cents a share. So it's $37.89 times 57 cents. And you guys can see that we're pretty much right around that $20 a month that we told you guys that we wanted to get to with each fund. And I mean, as for YMAX, its performance has been pretty good, honestly. It's actually been better than we expected. So as you guys can see, it got listed back here on the 17th of January. That's almost 2 months ago. It's actually pretty much just been going up. So that's one of the good things about this being a heavily diversified fund is, there's a lot of diversification and exposure across multiple sectors of the market there, and it's been working out great. So we're just going to hold it for now. We'll get more into the goal for our crypto positions going forward, but this month is going to be the month that we get ultra super aggressive with our crypto buys. Everything we've been doing up until this point has kind of more or less just been the warm-up phase to get ready for the actual bull runs. So anyways, this is the YieldMax fund of funds and all that good stuff for this video. Hope you all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.